Hello and welcome to Core Finance. This is the third and final video today with Connor Campbell of Spreadex, and we're looking at 3 UK stocks to look out for this week, starting off with Tesco's, the large supermarket, reporting this week. Any thoughts on this?
Yeah, it's easily the biggest stock reporting this week, far and away the most important in terms of what the FTSE could do as well on Wednesday. It's down 10% this year. It's the chart it paints an unflattering picture of Tesco, despite Tesco not doing too badly this year, really. Its full year figures earlier in the year, it was a bit of a mixed bag. I think like-for-like sales were up 1%, operating profit was up 30%, but pre-tax profit plunged 28%, I think, because of a deferred fine from the Serious Fraud Office.
Yes.
And it also warned on some pricing pressures, which obviously in the services sector, as in general in the UK, is a key issue at the moment. Since then, however, its figures have been very strong, especially I think it was back in June, its first quarter figures, UK like-for-likes smashed expectations. They were up, I think, 2.3%. Group like-for-likes were up 1%. Very, very healthy figures, especially given perhaps where it was a few years ago. However, as you can see in June, it plunged because it so happened that the day of Tesco's first quarter results was the day Amazon announced it was buying Whole Foods, and investors sort of went potty on that news. I think it's interesting how much Tesco plunged, given there's sort of quite a lot of mini bosses for Amazon to clear before it gets to the big final boss of Tesco.
Yes.
I've been able to take that on at all. Amazon would have to sink a lot of money into the UK for it to get anywhere near Tesco.
And Tesco's come out fighting. They're doing same-day delivery, I've seen advertising. So they're obviously aware of Amazon creeping up on them. Yeah,
no, there are plenty. Tesco's so well positioned in the sector that it could withstand any sort of major challenge from Amazon. And whether, buying Whole Foods isn't that big a deal in the UK. There's only a handful of stores, mainly based in London, and it's not really on... Unless you're really, really into organic food, it's not really on people's radar in the UK. So I think it was perhaps like a tad overreaction on that news. And as you can see, since then it's steadily climbed. I think investors sort of calming down a bit and realising, okay, actually, in what is a very, it's been a tough sector for the last few years, and what remains a tough sector due to inflation and real falling wages and things like that. It remains a tough sector, but despite that, Tesco is doing very well. Half-year figures on Wednesday. I think the second quarter was expected to continue the same kind of growth as in the first. I think like-for-likes are expected to jump 2%. That's compared to a 0.9% growth the same time last year. I think half-year earnings are expected to be up 30% as well. So very healthy figures. And perhaps this time around, investors sort of will react in kind, and our clients have been buying just under that 190 mark. I think they're at least looking for it to cross the 190 mark if those figures come in as expected on Wednesday.
Fantastic one to look out for there. Moving on, DFS Furniture always seem to have a sale on. The numbers actually haven't been too bad of late, have they?
No, well, it sort of depends. Like the first half of the year, sales growth was really strong. It was up 7%, and then you can sort of see where it went wrong. Like it's got that giant wound in the middle of the chart.
Yep.
That was, I think, it lopped off 20% on one day alone. That was because a profit warning, basically. I think profit is now expected to. Then it said it was expected to come in between 82 million and 87 million. Which was far lower than the 94 million that had been forecast by analysts. And then in August, its second half sales, they were down 4%. So I think for the year, sales were still up 1%, but it's seen a really marked decline in the second half of the year. DFS blamed the UK election. They said that the UK election had caused a significant drop in footfall and led to a material drop in orders. That seems a bit disingenuous to me, really. The UK election caused a bit of uncertainty around a very localised time between, mainly towards the second half of May and then the first few weeks of June. I don't think that's enough to explain a 4% drop in sales in the second half of the year. I think there's a lot more going on at DFS. Not necessarily its own fault. That it's a big ticket item company in a country that's household spending is gradually shrinking and is likely to continue to fall in the second half of the year. It's weird that it was so keen to pin it directly on the election when there are plenty of other macro reasons for it to have pointed to.
Reporting this week,
obviously the bar is so low now. I think with that sort of half-year sales drop, it also said that pre-tax profit was going to be at the lower end of expectations. So that points to an 82 million pre-tax profit this year, on Thursday. However, even if you can eke out 83 million, that's not a great stretch from what it stated. But given how low the bar is and how far it's fallen, it could see a bit of a bounce on that. Things aren't completely awful at DFS either. It bought Sofology in August for 25 million, so it's obviously got some spare cash lying around to buy out some of its smaller rivals ensuring that it remains sort of the dominant force in the sector. Like I said, if it can post a pre-tax profit figure that's a tad higher than the sort of the pretty dire numbers it's expecting, and suggest that and show some kind of better sales performance in the last couple of months than it did see in the second half of the year, then maybe investors are going to be willing to buy around that 220 mark. Our clients have been very, very tentatively buying around that 220 mark, looking for some kind of bounce off the back of hopefully a less dire update than is expected at the moment.
Okay, great. And finally, we're going to move on. easyJet performed well yesterday on the fall from grace of Monarch.
Yeah.
The crown has certainly been knocked off Monarch Airlines there. What can investors potentially expect on the numbers?
easyJet sort of, it's up 26, 27% on the year, almost in spite of itself, really. Its figures haven't been very good. First quarter update in January, it warned that its full year figures for the year, they were going to be 105 million lower due to the weaker pound. In May, it posted a headline loss of 212 million. That was up from a loss of 21 million the year before. So really, really ugly figures. But kept rising. You see a brief dip. You can sort of see in May where that report come from. But then bounced straight away. Oddly though, in July, it was its best report of the year. It said that full year pre-tax profit was going to be between 380 and 420 million for the year. That was higher than the 375 expected by analysts. But the stock, fell quite dramatically. I think
better to travel than arrive. I think. To quote BA, actually.
I think it dropped like 14% in the fortnight after that update. There were other issues. I think it said that revenue per seat in the second half of the year was going to be down 2%. And a few days before that, the update, the news was released that ITV had poached easyJet CEO Caroline McCall. So, I think there were some lingering issues there that perhaps overshadowed that pre-tax profit update. Like you were saying, yesterday you got the boost from Monarch Airlines collapsing.
Ryanair issues.
Yeah, exactly. It's also probably in line to be a benefit from Ryanair. Not just people having to rearrange their flights from Ryanair. There's plenty of flights there for easyJet to mop up. But the potential damage it's done to Ryanair's image. Obviously, Ryanair seems to be sort of impervious to criticism just due to how cheap it is. But perhaps this will be the straw that broke the camel's back, and perhaps people will look to move away from Ryanair and towards easyJet. I think it's definitely going to. It should, if it plays its cards right, it should benefit from that. In terms of its update on Friday, I think there are a few things investors want updates on. Firstly, whereabouts on the, sort of that pre-tax profit spectrum are the profits going to fall? Is it the 380 end or the 420 end? It's been in talks to buy parts of Air Berlin, which collapsed recently. I think investors will want perhaps a further update on if that's going ahead and what kinds of things they'll be buying off Air Berlin. CEO search, you're going to want to know, ideally when they're going to have a replacement for McCall in place, and really any update on perhaps whether it has seen an uptick in passenger journeys since all the Ryanair's issues and the Monarch collapse yesterday. So there's plenty of meat that should be produced on Friday from easyJet.
Fantastic.
Our clients buying around the 12.50 mark. Obviously, part of that was due to the Monarch airline collapse, but I think there are a few things that should go easyJet's way on Friday, so our clients are going to be looking for that.
Brilliant. Well, on that note, Connor, thank you very much for joining us today. Have a great week, and we'll catch up next week.
Thanks very much.